Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Good morning, everyone. Today we're joined by Steve Palmer, President and CEO of Alpha North Asset Management. It's a real pleasure for us to catch up with him. Is there anyone to talk to ask about what the current environment is like, whether we should be jumping back into stocks or not, what they're going to do with the debt ceiling, what's inflation looking like? Steve's the one to talk to. Looking forward to getting into this with him. Watch out. Good morning, Steve. It's great to see you again. I guess you're in France, so I'm glad you're able to take some time to talk with us because a lot of questions out there. How are you finding things overall?
Thanks for having me on. Well, the small cap markets have been challenging, but the broader indices have been doing much better year to date.
Now it is. I mean, it's so chaotic and it's challenging. I mean, even for someone like me who watches the markets all the time, there's a lot of different news out there. People are concerned about the debt ceiling. Maybe that's the issue. Maybe that's what's kind of holding people back, or maybe it's interest rates, or it's inflation. There's a lot of negativity out there, and I know just from talking to people, it's tough. But everyone seems to be waiting. And I guess my question to you was, what are they waiting for? And two, is there so much negative sentiment that perhaps maybe now is the time to start really, really looking to get back in?
I think that's the case. I think the sentiment is what drives equities, and that bottomed in Q4 last year, the October lows. And everyone, as you said, is focused on other things like the debt ceiling or the recession. That's all priced in. Like there's always problems in the world and things to worry about. And when the investor pessimism has a extreme peak like it did several months ago, I think that's a signal that equities should be bought.
I think it's Warren Buffett who said, whenever everyone's talking about selling and there's that much fear in the waters, that's when it's time to get greedy. And I always keep that in mind because I'm not much of one for timing. Like, I don't even attempt to get that timing exactly right on things. But that was the main question I wanted to ask, because it seems to me that there's so much negative sentiment out there. And there's a lot of political driven, even economic news that is confusing. But someone who looks at charts all day, you've got access to a ton of data with cash inflows, and I mean, you get to sit on calls with other fund managers and kind of talk to them. What are some things you can pass along to us that we should be paying attention to, especially for a retail investor?
Well, I was looking at a couple of charts this morning. One on global growth outlook, and it's the all-time low. Another chart I was looking at was the money in money market funds hit the highest level ever, 5.3 trillion. These are all signs of investor fear. And it's if you're bullish like I am, it's good to know that there's a lot of money on the sidelines, because if there's a correction, that'll be used to buy. And I think once the fear subsides, that's the money that will fuel the bull market.
There's a psychological issue too. Whenever we hit a top, which is also hard to time for a lot of people, that can be confusing because there's a lot of joy and people are like, "Oh, I'm winning," and it's great. It's a different mindset if someone feels like they've just been beat on, and especially coming out of COVID, and then they start hitting some, kind of financial issues, and they've got maybe a change in their mortgage payment. It's hard for an individual investor to think clearly and to get out of that negative, like, oh, it's doom and gloom. It's hard for them to maybe even see, is there an opportunity right now? Because it would feel almost like they're inundated with bad news and not used to it. So that timing the top of the market is one thing, but the timing of a down would be very, very tough for someone who isn't very like diligent or trained in what to recognize.
Yeah, I find it a lot harder to time peaks in the market. You can get investor euphoria that can go on for a while, like we saw in the cannabis sector. But at least I try. Some people say there's no point even trying to time the market, but you might as well try.
You have to try. Yeah. I mean, and I think what you're saying with the money on the sidelines, it's waiting. What, as far as kind of just generalities, when you're looking at Canadian small cap and the markets, how are the summers? Like, are the summers, do they tend to on average kind of start to pick up? Do you feel like there's certain things that you feel others are looking for to start kind of, what's the impetus for the next run?
Well, summers are often a bit slower, like lower volumes. There's that saying, sell in May and go away, which usually does work actually, but not every time. Like I always look at the context of it. And if we have had very poor markets leading up to like this spring, for example, it's less likely to work in my opinion. Like we focus on small cap at Alpha North. So, so far, like I've made the call that the broader indices have bottomed. That call is unfolding accurately. But the benchmark we use is the TSX Venture for our fund, and it has not performed as well yet. I think the venture index didn't bottom until December, and I attribute that to tax loss selling that continued right till pretty close to year end. But that's now over. And if you look at the previous cases where there's been a major market low, like in 2020 or 2008, it's the TSX Venture that has been the top performer from the bottom. And so it's my view that the venture stocks are going to take over the leadership in terms of performance here in the coming months.
What's your overall thought on with this kind of transition? We've talked about different sectors, whether it's mining and energy and kind of this new electrification. There's been a lot of like cool deals. I mean, there's, well, some maybe not, depending on what side of the board you're on, like VW coming into Canada with a battery plant. That's mixed emotions, but it's a move in a right direction. Or like Ford with CATL, them with their kind of life or lithium iron phosphate battery plant. We see these things happening, like big plays, but it doesn't seem to be hitting a lot of the venture or a lot of these other companies that would be feeding that system almost. Do you see that as being kind of like stored up value, that kind of like the money market, it's there, and once that's lit, it's going to really go?
Well, many companies are making a lot of progress on their business plans, and it just hasn't been reflected in their stock price. Like stocks are back to levels, a fraction of what they were when they had, like there's one biotech company, for example, I'm thinking of, that it had a market cap 5 times higher the last go around when it had a product up for FDA approval. So like, why is it trading at 1/5 of that now? I was at the recent Bloom Burton Biotech conference a few weeks ago, and somebody mentioned that there's 300 companies trading below cash value.
And biotech, the advancements in biotech and what we're learning and the pace, including, I guess, how AI can kind of come into this and help with that. I would think that would be a very good focus for someone. I mean, it's very difficult for someone to get into unless they have some insight into it, but there must be huge opportunities in that sector.
There is. Yeah. We do a fair bit in that sector. It's been tough. Like the XBI is the biotech index in the US, and it's been down significantly. It in fact bottomed before October last year. So often sectors that lead the way on the way down are the first to come out of it. So that's also maybe why you're seeing the NASDAQ stocks outperforming, is they were the largest contributor to the downside in 2022.
When I see some of the money that was put into the markets, and we haven't seen it yet, the promise of some of these things, and this is a bigger conversation, I suppose, but we saw with like Sam Altman, he's put, I think, $375 million into Fusion. And we've got AI. Those two things alone if they can like present the possibilities that they say they can, like those are markets that could, I mean, that's trillions of dollars. Like it would be a huge investment or gain for the economy that would replace any of the lost kind of value that we've lost in any way, shape, or form. Just those two things alone.
Usually these new technologies get a little bit overhyped at the beginning, and it takes longer usually, and investors end up being a little bit disappointed, and the stocks underperform for a period of time before they recover, and it actually does happen in a meaningful way. We may be seeing some of that in the AI space. I'm not sure. It doesn't seem to be a huge number of companies at the moment that are trying to capitalize on those buzzwords.
So what in the past, because I know each acceleration up and each kind of crash, they're similar, but not exactly, obviously not the same. What are some of the things that someone, if they're looking, we talked a little bit at the beginning, like, would it be that they increase the debt ceiling and then the Fed says, we're dropping rates? Do you think that would be the sign that everyone's waiting for, that retail investors, that people go, oh, okay, it's time to go. Like, let's hit the button. I mean, it's tough to say, but traditionally, what would be some of those signs?
Well, yeah, the debt ceiling, we've had this issue come about before, and it's always been resolved, and it will be resolved again this time too. That should be a positive catalyst. I don't see it as a major catalyst, though. Um, Interest rates coming, well, at least we have, seems to be consensus now that they are probably going to stop raising rates. If there's, I think the market's going to go up before they start cutting rates. So
Okay.
if investors are waiting for actually the first rate to be cut or the Fed to start talking about it, they're going to be leaving a lot of equity performance on the table, in my opinion. You know that the rates have stopped going up with fair certainty, and it's only a matter of when are they going to start going down? Does it really matter exactly when they start going down? Just like the recession that's everybody assumes is going to happen.
Yes.
I don't know if it's going to happen. It doesn't really matter to equities if it happens or not, because everybody already assumes it is.
Yes.
What I propose is, what if it doesn't happen? Then what?
Yeah.
Everybody's been assuming we're going to have a recession, and then we don't have one. Equities should rip.
We've seen some of these themes that come up every once in a while. Like, this is it. This is the end. It's the end of civilization. It's the end of the markets. But it's 2008. We've hit this level of debt and money that it's insurmountable. But yet life goes on. We get another cycle. Mm-hmm. And I'm sure this probably happened in the 70s when they said, oh my God, we've got a level of debt that we can never pay. It's unrealistic. It's the run's over, and yet we had the 80s. So do you think it's kind of just more of the same human sentiment and mindset that just kind of catches us every time?
Yeah, I think so. I think the emotions of fear and greed are quite powerful. And it wasn't that long ago where they were having town hall meetings on the status of the TSX venture and how we're going to save it. And then the next year it was up like, 40-some%. So once there's money starting to be made in the market and people see there's been a couple big wins, they're going to want to get on the next one. And I think we're starting to see that. I've seen some stocks lately that have been, with the help of some aggressive promotion, I guess, have done extremely well in a short period of time. And so at least there is appetite from retail to buy stocks aggressively if they think they're missing out on something.
I know your fund as well. You've been in for, was it well under like 20 years or so?
The Alpha North Partners Fund was launched in December 2007.
2007.
Yeah.
So you've seen the 2008. You've seen all the markets. You've seen every scenario that's been thrown at someone. And I think to be able to talk to you, to see that you're more optimistic than all of the noise and the news out there, that's a message I think people should really listen to. And I'm sure if they have interest, can reach out to you as well, especially if they have interest in your fund, because having a voice that and it's not just being a contrarian, but someone who's seen these big runs and these big falls. That says a lot.
Yeah, we've been managing like we we've been my partner and I've managed money, small cap money for 25 years. So we've seen like four major cycles in the junior market. So there's been four major lows that we've managed money during. The best of which was the 2002. There was a recession in after the tech bubble burst in the early 2000s, and there was a massive resource bull market from 2002 to 2007 until the financial crisis, and that was a great period. And it's possible we have another period like that, several years of stellar performance from resources. That's many in the junior space believe that we're going to experience that. And if you look at gold flirting with all-time highs and a lot of talk about all these critical minerals and all the copper that's going to be needed for the batteries and all this stuff, like it makes sense that given how depressed many of the stocks are, that we could see that.
It is interesting to see a lot more like mainstream news on how necessary critical metals are. Like if we're going to do this transition, I mean, let's be realistic. And that's even on like a naysayer side. They'll say, well, we don't have as much, like we couldn't possibly mine that much. And to me, I think, well, that's even more positive. It's because it's highlighting you need these things, but you also need them somewhere fairly close. Like, trying to ship things right now is still not the easiest thing in the world, and it's costly. If you've got resources, which we do in Canada, that could supply the likes of this, like the Ford battery, Volkswagen. I mean, they're building out chip factories in the US. They're bringing back a lot more industry. And my thought and hope, and hopefully you'll agree, is Canada can play a major, almost key, vital role in supplying that.
Canada does have a lot of resources, and I think the Western world is realized that they can't be so dependent on China for some of these metals. And there's a major push to have domestic supply, particularly of critical minerals.
And do you find also just kind of, because in the junior space and say with mining stocks, is that they're kind of like, are they the last to go? Like, does it trickle down? Like when commodities are up, because I've seen some like commodity traders, they had like a banner year. They've done very well because commodities have done well. But does it take a bit of time for that to trickle down to like your A-tier mining companies and then more kind of like your explorers that are closer? Does it just take a bit of time, and there might be some stored up kind of value there as well for them?
Usually the whole sector is depressed, and the easiest way to start to participate in it, if the investors believe it's turned, is to buy the large caps or maybe the mid caps, which are also very cheap and they're very liquid. But once the returns get they've done well, and there's like a minimal upside left, they start moving down market and to some of the smaller cap names. Usually it's the domestic players, like the North American assets. And then as you get more progressive in the bull market, you'll start reaching out into some of these higher risk foreign jurisdictions, because those haven't moved because they're much higher risk. And then it kind of goes that way, is what I've experienced.
So I think it's important that whenever we're talking about like large cap and small cap, what's a good metric, or how does someone know, when to move between the two? I mean, what's some of the data on that?
Well, the US data is far better than the Canadian data. So in terms of the US data, the small cap PE multiple is currently in the second percentile historically. So it's well below the 15-year median. I believe it's at 11 times. If you look at just the profitable companies in the Russell, 11 times forward PE.
So just to kind of wrap this up, because I know you've got other calls to do, what would be your overall kind of theme if you were to wrap this up and message to people right now, especially with all the negativity out there? What would be your message to them?
Well, I think you got to try to ignore the overwhelming negative press and commentators, and be a contrarian, because that's where the money is made. Like, it's kind of like what Warren Buffett says: when there's blood in the streets, you want to buy; the opposite, you want to sell when there's excessive euphoria. And right now, everyone is negative. Almost, well, not every, like, I've never seen it so negative. So I've been through like 4 of these major cycles, as I mentioned, and I don't think there's ever been one before that we've seen this much negativity at this stage of the market. And the best way to play a rally is the small caps, because they will perform the best in percentage terms. And the opportunity is now, because they've lagged initially, but I think they're going to catch up.
And the best chance that you're going to have is to have access to a professional like yourself, who has a fund and who was done the research and has positioned themselves for this potentiality. And I really appreciate you educating us, giving us your thoughts, especially now, because it is a challenging time and people are really I think they need to hear that there's some hope and that there are people who've experienced this already a number of times, and that is hopeful and sees that there's a big, bright, shiny light at the end of the tunnel here.
Yeah, so I'm pretty optimistic.
Great. Well, thanks so much, Steve. I really appreciate you taking the time.
Great. Well, thanks for the interview.